think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. Today, this episode is sponsored by the Rule Symposium. We're going to have Rick Rule talk about that more later in the episode, but please enjoy this episode. Hey Rick, how's it going today?
Life is great, Daryl. I hope it is for all of your listeners. I hope they take control of their lives so that they can make their lives great.
Yeah, definitely. Just talking offline and everything, and just everything I've been going through. I've shared some of it with the audience of just like, being in school, having a new child and everything. They understand, but I'm back in it, trying to really just, we all trying to find this purpose in life and what works for us.
Absolutely, and the right time to start is right now when you did.
So. Yes, indeed. So I wanted to get your a lot of things have been happening. I wanted to get your current assessment of the economy. Where do you think we're at? I mean, obviously, the Fed, Jerome Powell's coming out today. We've had some issues in the banking system. Where are we at in this process? Like, this is my first bear market, experiencing, and I don't know where we're at.
Well, first of all, a bear market's a good thing. It makes assets cheaper. And when you're building wealth, which is the stage that you're at, cheaper is better. So don't think about a bear market in a negative context. Think about a bear market as a sale. Daryl, if you and your wife, I don't know where you shop, but if you're South Center in Seattle or North Center in Seattle, one of those great big hyper malls, and you need a winter coat, and you're walking through the mall. If a coat has been marked down from $300 to $170, you're happy. But if you're in the stock market and a piece of stock has been marked down from $300 to $170, you're scared. The truth is that you don't know if a coat is worth $170 until you studied something like the stitching and the materials and all that kind of stuff, the style. And you don't know if a stock is worth $300 or $170 unless you studied the stock. But if you've done the work, a bear market is a good thing, not a bad thing. It isn't necessarily a good thing if you're my age, unless you've been lucky through life and you can get through no matter what. But as a young person building wealth, a bear market is a very, very, very good thing if you do the work. It's also a good thing because the outcome that occurs in periods of volatility vary. They vary by discipline. The person who is disciplined, the person who has the courage of their own convictions, can take advantage of a bear market. The person who isn't disciplined, who hasn't done the work, who hasn't done the study, who relies on how they feel as opposed to how they think, they get victimized by a bear market. So the choice is really your audience's choice. Do they benefit from a bear market, or do they get penalized by a bear market? The choice is every individual person's choice. Now, I feel like the last 40 years have been very benign in terms of investing. Maybe that's because I learned my lessons 45 years ago, and I went through the last 40. But you think about the last 40 years, we've had inclusion of tens of millions of people, into generating wealth that for various reasons had been excluded before. We had much more openness, much more free trade. We had political liberalization around the world. That's, of course, changed. We had an absence, mostly, of war around the world, of very good things. Importantly, we had declining real and nominal interest rates for 40 years. And that meant that confidence increased, the price of assets increased, all that kind of stuff to illogical levels. Confidence increased to the point where people were putting deposits in banks, as an example, that were poorly run. And my belief is that party's over. It's gone. Interest rates aren't going to decline. They're going to increase. We're having geopolitical tensions worldwide. I think we're going to have more and more social tensions in the United States as people who haven't been able to avail themselves of the benefits of the system resent the people who have. And we're not going to have declining interest rates. So I think that the next 10 years is going to be, to coin a phrase, interesting. It's going to be much more like the decade of the 70s than the decade of the 90s. The decade of the 70s just happened to be very, very good for me. And I think if you prepare yourself, it can be very good for you. But your game plan is going to have to change. People are going to have to play a little bit of defense for the next while. People are going to have more cash than they otherwise would have. People are going to have to be disciplined with their savings. People are going to have to be disciplined with their spending, and people are going to have to be disciplined with their investments. There's going to be fewer winners in the next 10 years than there have been in the last 40, but it's really truly up to your audience whether they're going to be winners or losers. And the biggest determinant of that is what goes on in their own mind. You look at the risks out there, you know. I have people email me all the time and say, you know, I can't get ahead because I'm afraid of China, or I can't get ahead because of Biden, or I can't get ahead because of this. I can't get ahead because of that. That's all ridiculous. Everybody's biggest risk is conveniently located to the left of their right ear and to the right of their left ear. And if you manage the risk that is you, all those other risks are a piece of cake. They're truly a piece of cake. So, you know, what I'd like you to tell the people who listen to you is prepare themselves for volatile time, play a little defense, and invest in the most important asset that they have, which is their own intellect and skill set. And if they do that, they won't just survive, they'll prosper. I know, I did it too.
Yeah, I really appreciate the that wisdom that you just spoke. And so one thing I'm kind of interested in is you mentioned that interest rates won't decline with the recent issue with Silicon Valley Bank and Signature Bank and the Fed. Well, I guess part of the issue, one of the big issues, was that they bought these bonds when interest rates were very, very cheap.
Yes, sir.
And now they have to take a loss on them. Do you see, how do you see the interest rates going higher playing out with the banking system?
Well, I think when I talk about interest rates going higher, I'm talking about a 10-year time frame, not a 3-month time frame. Pretty clearly with the problems that Credit Suisse is having. I call them debit Suisse, by the way. They don't have a credit, they have a debit. But anyway, Silicon Valley Bank, Signature Bank, First Republic Bank, all of those things. It is not unlikely, I'm not saying it's certain, it is not unlikely that the Fed is going to have to try to lower interest rates. It's very clear that all the money that the Fed had to give to bail out the banks didn't come from taxpayers, and they weren't able to borrow it. They had to print it. So it's pretty clear to me in the near term that they're going to have to rely on quantitative easing. And you remember, Daryl, 2.5 years ago, maybe, we talked about that. We said that quantitative easing is code for counterfeiting. If you quantitatively eased, if you had a printing press in your basement, you printed up Daryls and tried to spend them, they'd put you in jail. But if you were a congressman and you printed up dollars, everybody'd be happy and they would re-elect you. So yes, in the very near term, probably what you're going to see is at least a moderated increase in interest rates, and not unlikely a decrease in interest rates. And you're going to see more counterfeiting. And the way that you protect that, Daryl, you're familiar with. You buy gold. And you hope the gold doesn't go up in price a lot. Remember that gold is social insurance. Gold is protection against the madness of the crowd. And while you want to be protected, a circumstance that sees gold at $4,000 or $5,000, while it's not unlikely, would also not be pleasant. But it's important. We talked about disciplining your mind. It's important that if you believe that the government will continue in the intermediate term to do quantitative easing, and will attempt to manipulate interest rates down. Unfortunately, the only way that you can protect yourself from that as a saver that I know of is through a very, very, very high quality business with pricing power, or else buying gold. Most people don't have the ability to create a business with pricing power, a high quality business. And so for those people, diverting some of their savings, playing defense and buying gold is the way that they can defend themselves, take control of the situation, and prosper in hard times. You know, Daryl, if you, we were talking about interest rates. If you look at the value proposition around most savings products right now, let's talk about, as we have in the past, the U.S. 10-year Treasury, which is the world's predominant savings instrument. Right now, the United States government pays you about 4% on that. I think a little less now. In a currency that they acknowledge is depreciating in terms of purchasing power by 7.5%. What that means is that your government absolutely promises that if you lend them money for 10 years, that they will reduce your spending ability by 3.5% a year, compounded every year for 10 years. In other words, 40% of your purchasing power will be gone at the end of 10 years. Now, let's look at that in terms of simple arithmetic. How does that promise feel to you? Your government guarantees you, and by the way, I think they'll keep that promise. They guarantee to reduce your purchasing power by 40% over 10 years if you lend them money. Does that seem like a good deal to you?
No.
It does not to me. And that's what I'm talking about in terms of having people just study and think a little bit. The government calls that risk-free return. That's wrong. It's return-free risk. And those are very, very, very different subjects. And really what I'm asking your listeners to do is think about their life and think about their futures in those arithmetic terms. I'm not saying that your listeners should put 100% of their net worth in gold and get out of cash. I'm not saying that at all. I'm saying that your listeners should put 5 or 10% of their savings in gold and regard it as an insurance policy. Because if push comes to shove and things get truly ugly in the fashion that they got truly ugly in the 1970s, that gold will increase in price enough that it will shelter the rest of their portfolios from some ugly consequences.
Yeah, and we saw that recently. I mean, I've will watch the price of gold. I usually don't watch it. I'm not an everyday watcher of the price. But I mean, during the pandemic, obviously we had the price went down and then shot up. When we had the invasion of Ukraine, gold shot up. And then when we recently had this banking issue, gold shot up, and it really is like a social insurance.
It's particularly insurance against negative real interest rates. Negative real interest rates are popular because what negative real interest rates are, politically prescribed negative real interest rates, are a war on savers by spenders. And sadly, in the United States, there's more spenders than there are savers. But to get ahead, you have to be a saver, not a spender. You have to understand that the voters and the government, if you're a saver, are waging war against you with negative real interest rates. And you need to defend yourself. You do need to keep cash, even despite the fact that keeping cash is costing you purchasing power. Keeping cash, you need to keep it in very short-dated obligations. What happened to Silicon Valley Bank is they bought long-dated obligations funded by short-term deposits. When the interest rates went up, the capitalized value of those long-term obligations fell. And Silicon Valley Bank found themselves bankrupt. When your listeners think about their own circumstance in the context of Silicon Valley Bank, because you have to remain liquid, you need cash to take advantage of opportunities. You need cash to feed your family in an emergency. You need cash just because it enhances your sense of well-being. But that cash should not be in long dated instruments. That cash should not be in 10-year instruments. That cash should be in 1-year instruments.
Yeah.
You know, the other thing, Daryl, and I'm sorry to go on this rant, but I've talked to so many people in the last 6 weeks who have been scared and made stupid decisions. A whole bunch of folks that I know and a whole bunch of folks that you know have their cash in banks, in checking accounts that don't pay them any interest. Why would you do that? If you have $10,000, I don't know what the number is that your listeners have in the bank. If you have $10,000 and you're getting 4% as opposed to getting no percent, that's $400 a year that you didn't have to go out and work for. You know, if you're, I don't know, a $100 an hour worker, if you're a $50 an hour worker, that's like 8 hours that you could be doing something else.
Yep. Yeah.
People just need to use their common sense. These big banks, Wells Fargo, JP Morgan Chase, there's billions and billions and billions of dollars that lazy people have left with them that earns them no interest. This is insane. This is truly, truly insane. And it's important, I think, that you reinforce the message to your listeners that they need to take control of their financial future. I walked into I'm not going to name the bank, but I walked into one of these great big financial supermarket banks up here in Northwest Washington. They had 14 savings products in the bank. Now, the first thing is that the bank manager didn't know very much about any of them. She referred me to a white phone where I guess I phone India or something like that. But when I looked into these savings products, fully half of them didn't pay me any interest. Now, why would I care about 7 investment products that were basically wealth transfers from me to the bank? Sorry to go on this tangent, but you know, people are looking at all this stuff and they're getting afraid, and they aren't practicing any financial self-defense at all.
Yeah, agreed. Yeah, I did a video update video recently, and I talked about strategically, like, you know, having cash, obviously it's the medium of exchange, but being strategic with it and not just putting it in a bank that gives you 0%. I do have a big bank that gives me nothing on my cash, but then I have multiple other savings products that give me 4%, 3.5%, you know, and so I'm earning something when my money is in or using those vehicles versus like the big bank. I keep no money in the big bank. I just use it just to pay bills and stuff.
Good for you. Good for you.
You know. I read the recent email that came out from Battle Bank, and you know, I'm on that email list. I'm waiting for y'all to open and everything. But I really appreciated how, in the midst of that crisis, this banking crisis, that you all sent the email out to your subscribers. I wanted to just give you the floor if you wanted to share anything regarding how your Battle Bank structure is to protect people and depositors.
Well, obviously, the name Battle Bank means that we want to battle for your business. You know, people say, Rick, how on earth can you take on Wells Fargo, Bank of America, JP Morgan Chase, Citicorp? Truth is, I can't, and they can't compete with me either. There's billions of dollars sitting in those banks where the depositors aren't getting paid any interest. We built a pretty big bank years ago called EverBank, and we did it by having a one-size-fits-all account where you could write checks in your savings account. You know, we would pay you interest on your balance, one product, not 14 products. There's plenty of money to be made in the banking business. I'm not doing this as a charity. This will be my 7th bank I've been involved in my life. There's plenty of money to be made in the banking business if you are prudent, if you're safe, if you are borrowing money from depositors on a variable basis at sort of prime less a point, and you're lending money out at prime +2 or prime +3, and you're not spending a lot of money on G&A and, you know, Mercedes and stuff like that, or particularly if you're Battle Bank, you don't have a branch banking network. In other words, if you don't have a bunch of managers around branches that don't understand their products, there's lots of money to be made in the banking business. You don't need to rape your customer, either your depositor or your borrower. So that's what we'd like to do. But we aren't the only one. I'm not going to tell your listeners that the only bank that's right for them is my bank, Battle Bank. That's not true. There might be other reasons to do business with a bank. You might be involved in a profession where you have access to a credit union. And it might be that that credit union is well run. Most aren't, but that's okay. You might have access to that. It's not important that your listeners do business with Battle Bank. I would love them to do business with Battle Bank. We built up at our last bank a very large deposit base by treating our customers right. We built a business where first-generation Americans who came from other countries and still do business in those other countries could bank in the United States in their own currencies, in Hong Kong dollars, in Australian dollars, in Canadian dollars, in Mexican pesos. We built a bank where people could earn interest on their checking accounts. We're building a bank now where people who own precious metals, and we think everyone should own precious metals, can access their precious metals for cash, which is to say they can borrow against their precious metals holdings to take advantage of opportunities to buy more precious metals, to do that type of thing. But we aren't the only bank out there. Obviously, we're my favorite bank because we're partly my bank. But we just believe that banking is a good enough business that you don't have to abuse your customer. That the way you make money in banking is you service your borrowers and you service your depositors.
Mm-hmm. Yeah, that's good to know, especially in the middle of like this crisis where trust is eroding and everything, to have like good banking products. It actually, when you were speaking, it reminded me of a current bank I use. It's online and it's tied to like my one of my investment portfolios, and and it's interesting because like I've never seen a branch, and but like they give you a debit card. You're able to, I don't know how they partner with ATMs around
Yep.
The nation, and then they're able to reimburse you for any fees that you may incur from an ATM and everything, and it's just all online.
You're younger, and so you're more technologically competent than I am. I would prefer myself, because I've been around branches, to go into a branch and to have the branch manager be able to explain all of his or her products and to have the sort of one-on-one service. But what I want is not what I receive. Mm-hmm. I want to go into a branch and have somebody on my side to have real good products in that branch. What I've learned in 50 years of hanging around bank branches is that they're a cost center for the bank. They don't improve the service that I receive, and they reduce the interest that I receive on my savings, and they increase the interest that I pay on my borrowings. So the idea that there's this whole infrastructure of branches that doesn't do me any good at all is not of interest to me. It would be of substantially less interest to me if I were your age and the age of, I think, many of your listeners, and I had more technological facilities. People say, well, I need a branch because I'm going to need a mortgage. You need a branch to get a mortgage. If you have decent credit and you're borrowing a decent house, there's 1,000 folks out there who want to lend you the money to do it. You don't need a branch for that. And by the way, you don't need to get a mortgage from the same people that you have your savings with. That's not the way markets work. Anybody with a willingness to read the gobbledygook around deposit products and mortgages has absolutely no use for a branch at all. None.
Mm-hmm. Yeah, agreed. So in the recent hysteria, the banking stocks got absolutely crushed.
Yep.
For me, I saw it as an opportunity. We played our cards on the Russia stocks, on the Russia stock, and I was just thinking like the government's definitely going to bail them out.
Yep.
And so I felt a lot of them were a good buy. What was kind of your take on the hysteria and the fear with the banking stocks?
I thought that the big banks were a good buy. I didn't do it. The only bank stock I bought was Farmers and Merchants Bank of Long Beach. because it's so well capitalized that I thought that Farmers and Merchants Bank of Long Beach would be able to pick up market share as a lender against competitive banks. And well, I thought that the big four were probably good buys. They are all so financially complex that despite the fact that I'm pretty good at understanding balance sheets and income statements, and even though I'm from the banking business, I can't understand the balance sheet of Wells Fargo. I can't understand the balance sheet of Bank of America. I understand that they're believed to be systematically too important to fail. But even if that's true, I don't want to be afraid, Daryl. If I don't know something, I get afraid too easily. I think as a speculation, if this banking contagion continues, if you see more failures, particularly around small banks, I think that the community bank ETFs, exchange traded funds, might be very good speculations. I'm not calling them investments because those ETFs own shares in hundreds of banks, and there's probably some crappy banks in there, and you don't know. But if you saw the banking ETFs fall 50%, they're already down 20% now, so that these things were off 70%. Banking is a very good business. It's not going away. So as a speculation, putting 10% of your portfolio in a community bank ETF when it's off 65 or 70%, when the market is acting like the banking business is going to go to business heaven, it's not going to happen. You remember 3 years ago, Daryl, we were talking about oil and gas, and the oil price had fallen from $120 a barrel to $20 a barrel. And I remember saying to you, I don't know if you remember on an interview, if you believe that 5 years from now you're going to be able to drive your car, then you believe that the oil price is going to recover to at least 60, which is to say the oil price is going to triple and the oil stocks are going to do better. There's some points in time in your life when it's just absolutely common sense. If the community bank stocks fall by 70%, banking is not going to go away and no stocks are going to come back. Speculate within your means. Investing in banks means that you understand the bank. And most of your listeners right now probably don't have the sophistication to read a bank balance sheet and a bank income statement. I hope if we talk together for 10 years that we'll be able to educate your constituency to the extent that they will be able to do that. There's a difference between investing and speculation. But if you see the whole world say that banking is going to go away, banking is not going to go away. And a wonderful speculation is taking the backside of that bet within your means.
Yeah, I'm interested to see what Warren Buffett did.
He's the best. He's the best. He never invested in oil stocks his whole life. And then 3 years ago, when everybody said that, Greta Thunberg was going to rule the world and, your car wasn't going to start, and places like Germany where the sun didn't shine were going to exist on solar, Buffett had the very good sense to say, I don't think so. And he invested tens of billions of dollars in the oil and gas business. Now, when people are terrified of community banks, from what the reports say in the media, Buffett's thinking about putting 40 or 50 billion dollars in well-run community banks. That tells you a lot. Now, Buffett's in different condition than you and I are. So if he lost half of 40 or 50 billion dollars, it wouldn't change his decision as to what to have for breakfast. When I said speculate within your means, two things. Buffett's a pretty smart guy, so he's investing, not speculating. And his means are different than ours. 40 or 50 billion dollars to him is, maybe 10% of the portfolio.
Yeah, for sure.
But it's instructive that he always looks at places where terror reigns.
Yeah, agreed. So there was a big drawback in the commodity prices. I was wondering, did Rick Rule buy? I know I went in and I was like, hey, uranium's on sale, oil was on sale, and a lot of other stocks that I'm into were on sale. So I went in and had to deploy some capital.
I continue to buy the oil stocks. I believe that in the very near term, that there's going to be a lot of tumult in markets, and that tertiary markets, that is to say very small markets, are going to suffer from volatility the most. So I haven't been buying the penny stocks. I'm dying to, but I think they're going to get cheaper. I think the market's going to respond to fear with a sort of a spasmodic lurch to risk off. And there's no riskier asset class in the world than commodity exploration stocks, particularly ones that are operating in countries that most people can't spell or pronounce. So while I really want to buy that stuff, because I love buying stuff that people are afraid of, people aren't quite afraid enough yet. And I can still buy Devon and Anadarko and the great Canadian ARC Petroleum, and for that matter, Exxon and Chevron at substantial discounts to what I think they're worth. And I can still be paid higher dividends than I would get from a U.S. Treasury, which doesn't give me any growth at all.
Yeah, agreed.
The idea that I can buy a wonderful company for half what it's worth and be paid 4.5% a year, that's what I've been doing with my own money.
Yeah. I was reading a recent article I think it was in the last month. President Biden came out and said we're going to need oil production for at least another decade. I want to get your thoughts on that. I mean, we've been talking about this for a while, and we've been telling our audience, no, you're still going to have to drive your car. Yeah. There's still a lot of investment and capex that needs to go into the oil markets. Population's growing. There's supply shortage, all those things. And then, he's just now coming out in 2023, saying that we're going to need it for another decade.
I'm delighted that it came to the president's attention. These guys, they're not the sharpest tools in the shed. They're pretty good at getting elected. But don't confuse yourself that they're your friends. If you're a politician, the most important thing in your life is power. That's why you subject your family to the horrible lifestyle. Can you imagine being president? I mean, can you imagine what that does to your kids, your grandkids, your wife? Your wife knows walking down the street, there's some whack job that's going to try to shoot you. That's the way it is. You subject yourself to such an insane lifestyle. Obviously, power is important. So to Mr. Biden, he has to lurch backwards and forwards between positions that enhance his power. It's nothing about what's better for the country. And he doesn't have time to understand anything about the oil business. He has to understand 1,000 things. There's no way on earth he can do it. The best he can do is hope to understand 15 aides who try to do it for him. If he had time to study it, and if he cared about what was right as opposed to what kept him in power, this is not rocket science. The world has spent trillions of dollars in the last 40 years on alternative energy, and the market share of alternative energy in terms of power generation, or put differently, the market share of oil and gas in energy has fallen from 82% to 81%. A multi-trillion-dollar investment over 40 years has reduced the market share of oil by 1%. And Mr. Biden believes that the oil industry is going to go out of business in 2030. Now, maybe for Mr. Biden, if the whole country gets behind things, he can buy a new Air Force One jet that runs on electricity or something. But Daryl Thomas needs to get to work. When Daryl Thomas goes downstairs from his living room to his garage and turns the key to the right, the car better start or Daryl's family doesn't get fed. What that reality means is that peak oil demand occurs probably in 2045, not 2030. And then it doesn't drop off a cliff. It declines for 30 or 40 years, meaning that the oil business is going to be a good business for 80 years. And it's priced as though it's going to go out of business in 2030 because big thinkers like the president care about what's politically palatable, not what's real. Your listeners need to segregate in just that fashion. Your listeners need to listen to the president and say, why is he saying what he's saying? Does he know anything about anything other than how to stay in power? Does he care anything at all about my family? Can I consign the future of my family to that man? And by the way, this is not me harping on him because he's a Democrat. I got no use for Republicans either. I think that responsibility for the future of Daryl Thomas' family rests solely with Daryl Thomas, and I think that's a pretty good place for it. I don't think it ought to rest with the president.
Yeah, agreed. Yeah, there was it was interesting just to see, like, I actually went through a video reading one of the articles, and it was just like I asked if this was the Biden pivot, and just thinking about it, like how, gaining the trust of those who are all for alternative energy. And for those listening, like, we're for alternative energy. It's just doing it responsibly and also like being realistic with our circumstances. And so, he pumped that crowd up. He was going at it with big oil and
Yep.
they were sending emails back and forth and everything. And then in this article, he comes out and says, like, oh, the oil companies won't invest more into their business because they fear that he's going to shut them down. And so, yeah.
Let's, just for fun to make your listeners mad, let's compare big oil with big government. Big oil has to convince you to buy their product. In other words, they have to convince you to go to Exxon or go to Shell or go to some other place. They have to convince you to use oil at all. The government doesn't have to convince you of anything. They have guns. They get to coerce you. So your listeners need to ask themselves, first of all, what relationship they would like with an institution. Would they like to have to be convinced, or would they like to be coerced? When I say coercion, the big companies have to sell you something. They have to convince you. Government doesn't have to convince you to pay your taxes, Daryl. If you don't pay your tax, the first thing that happens is you get a nasty letter. Then you get a second nasty letter. And then a couple of big guys in blue uniforms with guns come to visit you. This is not a function of being convinced. So big oil has to convince, big government can coerce. But the other thing is that big oil has to be relatively efficient. They have to bring gasoline to a corner near you at a price that you can afford so that you can travel to work to feed your family. Government doesn't have to do that. And if you choose to have a relationship with big oil that's deeper than that, which is to say, become a shareholder, become a constituent, they pay you 4.5% or 5% dividend, while the government takes 40% of your paycheck between federal, state, and local. So if you think about it, if your listeners think about it, would you rather pay a tax, or would you rather receive a dividend? Is it easier for you to do without government, without whatever your favorite government program is? I don't know what it is. Or is it easier to do without oil? Would you prefer to be convinced, or do you like to be coerced? When people talk to me about the villainous proposition of big oil, and I compare it to the proposition of big government, I come to love big oil.
Yeah. It makes sense. It makes sense. So today I got an email, and I don't know if you have anything to share on this, but I saw that Sprott released a nickel miners ETF.
Yep.
Did you have anything sound out? I'm like, hey, this is pretty cool. I don't see a lot of nickel stocks or whatnot, or I don't have time to dive into the nickels market of that nature, but I know it's needed for like clean energy.
Yeah, it's needed for all kinds of things. Yes, nickel is needed for clean energy. As an example, batteries don't work without nickel, but stainless steel doesn't work without nickel. You don't get a refrigerator without nickel. You don't get a jet plane without nickel. You don't get a high quality car without nickel. And the world is changing, Daryl. It's changing right in front of us. For 30 years, we have underinvested as a species, I mean humankind, in raw materials. We've underinvested in a whole range of raw materials. And as the world keeps growing, as more and more people are on Earth, and mercifully, as we do a better job as a species, increasing the material living standards of the poorest of the poor, those folks want to live like you do, Daryl. They want to live an energy-intensive life, just as you want to live a better material life. To do that requires more copper. It requires more nickel. It requires more rare earths, all those little elements that end in IUM that are in your cell phone. It requires more tin. We're going to experience shortages of all these things in the 5 to 10 year time frame. What Sprott has recognized is that most people haven't spent 30 years studying these things like we have. And so our hope is that we can create investment products that will allow people to participate by buying a broad range of companies in these specific areas without having to devote 100 or 200 hours of study to the sector. I'm hugely excited about our energy transition metals ETF, about our nickel ETF, about our copper junior ETF. Sprott is creating a whole range of products that will allow average people who understand that society is underinvested for 30 years in raw materials, and understand that energy transition and frankly, the advancement of humankind is going to do wonderful things to the market for these metals. You know, Daryl, when we think about electricity in the United States, you and me, we think about it from a fairly privileged position.
Mm-hmm.
You know, some of us are better off than others, but we come to it from a very privileged position in our country, our lifestyle. Look at the backdrop where you are. You got a lot of nice stuff. You're able to provide for your family. Yeah, you think you could do better.
This is a virtual background. I don't want y'all to see.
Yeah.
Really, but yeah, I definitely understand what you're saying.
But you could do a virtual background. You know that there's 1 billion people on Earth that don't have electricity?
Mm-hmm.
There's another 2 billion people on Earth that have intermittent or unaffordable electricity. And we've done a wonderful job the last 40 years of raising the material living standards of the poorest of the poor around the world. When I used to travel on mine tours, I'd go to countries where the biggest social issue was starvation. Starvation. Malawi, when I went, the biggest social issue there was starvation. Biggest health challenge there now is obesity. Now, I'm not saying that people ought to be fat, but that's a choice. Starvation is not a choice. The point of all this is that when you think about the advancement of humankind, when you think about providing basic electrical services to 1 billion people who don't have any, or reliable electricity to 2 billion people who don't have that, that requires nickel, it requires copper, requires coal, requires uranium, requires oil and gas. Yes, requires solar too, but guess what? Solar requires copper. Solar requires silver. And all these things are going to happen. All these things are going to happen. And you can participate in it. It's inevitable. Or you cannot. It's up to you.
Yeah, definitely. Yeah, I definitely appreciate the perspective there. I was at the Silver Bootcamp.
Yeah.
Sometimes I go to war in the chat and everything. Sometimes I like doing that. But I think the vote was for battery metals for the next boot camp or something like that.
Yep.
So that's cool timing. So everybody be sure to look out for that boot camp coming up. And then I wanted to give you time as we wrap up to talk about the symposium and what people can expect.
We talked about the importance of people educating themselves. If your audience has agreed with the thesis of this phone call, which is to say that raw materials will have a prominent place in investments in the next 10 years, but that the investment climate overall is going to be more volatile than it's been. The best investment that you can make is an investment in your own education. And that's what these symposiums are about. Now, this happens to be a natural resource investment symposium. both my physical and my virtual symposiums are educational products that are designed to give people enough information or enough access to information that they can responsibly take control of their family's financial future, or at least that part of the future, which is in precious metals and natural resources. At our live conference in Boca Raton, Florida, which is what you refer to, what your link will refer to, this is really a jam-packed 4 days. We're going to work you real hard. If you don't want to work, don't come. We're going to have big picture thinkers who can explain the world in the way it is, not the way that Biden thinks it is or CNBC thinks it is, but the way it is. Importantly, then we'll have analysts, which will tell you if you agree with the thesis about the way we think the world's going to become, how you act, how to understand, how to analyze oil stocks, how to understand mining stocks. More importantly than that, Daryl, we have the living legends. We'll have 5 or 6 people who speak to you who have built multi-billion-dollar oil and gas and mining companies from scratch. They'll talk to you about the lessons that they learned building these multi-billion-dollar companies and how those lessons made them better investors and how you can become a better investor too. The most important part probably is the guarantee. Your listeners who come to my conference, you too, if you pay me a tuition, I can't give you your 4 days back. But if you come to the conference and you don't think you got your money's worth, you email me and I'll give you your money back. 100% money back guarantee. I've been doing this for 30 years. I have had to refund less than 0.5% of the tuitions that I've charged over the last 30 years. So the offer is riskless to you and it's riskless to me. I believe that the best investment that your listeners can make is an investment in their own education, in changing the way they think, in changing the way they act, in taking control of their future. I want to arm your listeners so they don't have to listen to the president, except for amusement. That they have the tools to understand what he and the other big thinkers say and translate them into action that they can take for their benefit and for their family's benefit. That's what I want to do. Go to the link that's on the website. If you can afford 4 days, you can sure afford the money. If you afford the money and you don't think that I've lived up to the value proposition, if you don't think that you've got enough information to justify the expense that you incurred to secure your family's financial future, just tell me. I'll give you your money back.
Yeah, that's an amazing proposition. So everyone, the link in the bio goes to the symposium website to where you can actually sign up and purchase your ticket and be educated in an amazing way. So Rick, just thank you for taking the time to do this today, and appreciate you for everything that you do.
I look forward to visiting with your audience, and Daryl, I look forward to visiting with you. So anytime that you think it's appropriate, I'd love to do it again.
All right, awesome. Thank you.